I'm in the go-go years, the slow-go years, or the no-go years. So maybe we purchase an annuity to guarantee $40,000 a year.
Yeah.
But on top of that, maybe I actually want $100,000 a year during my go-go years. So that other 60,000 in addition to my annuity income is going to come from my portfolio. Maybe I get to my slow-go years and now I don't need 100K because I'm not traveling all over the world as much. Now maybe I only need 75K. So 40,000 is coming from my guaranteed annuity. The other 35,000 is coming from my portfolio. And then last but not least, we enter our no-go years. And I have my $40,000 guaranteed income annuity. I have my Social Security. And then we're just supplementing anything above and beyond that from the portfolio that we need. And so that's one great way to kind of think about these life phases of retirement and how to structure a retirement income distribution plan that could align with your goals and objectives.